Afternoon, everyone. Trader Tim here from eminimind.com doing a Monday market analysis video. Today was a pretty significant day in that we had our first swing low break in really all year. We had a gap up, and so we ended up with a bearish engulfing candle at that. But the more significant break was the break of this swing low from the 27th. So from here, we have the potential to go lower, certainly, because we broke that swing low. On the 30-minute chart, you can see how we retraced halfway of the move. And so tomorrow, it'll be interesting if we break 27.99s, we'll call it, the 61.8. Anytime you have a failure of a move, a fake out, there's the potential for a really strong move in the other direction. So this break of the swing low would typically signal a continued or a start of a move downward. But if that doesn't happen, if we come up here this week and break 28 18s, create a new high, well, then there's going to be a big chase to end up pushing the market higher, and we should be able to get to 2,900 pretty easily. So hopefully this big candle that we've had today that kind of doesn't really fit in the pattern of small body, more range bound candles that we've had for the last month or so. Even though the market's trended upwards, the candles themselves have been pretty small. You got a lot of topping and bottoming tails on these candles, and this candle is kind of an outlier. And so when I see that, it's usually a sign that the market trend is about to change. And so if we look at how do the other markets relate, S&P, the Dow is the weakest in that this high over here is significantly lower than the high back here, whereas the S&P made a new high today. The Nasdaq, I would say, is probably the strongest, not breaking its swing low, and then the Russell breaking its swing low with that lower high over here. So kind of 3 of the 4 were not able to make a new high, looking weak. If you come into some of the individuals, within that tech sector, didn't really have a major sell-off or anything like that, and things like Apple, Google, Amazon, Netflix was one of the 4 that was down. Facebook had an up day. So, kind of mixed signals from the broader market and some of the heavier traded stocks. So for that reason, I'm not saying that it's a free fall to the downside, but it's just important to note when some of these patterns that we have, just basic higher highs and higher lows, when those break, that typically is a sign that some sort of change is coming. So be on the lookout for that. If we turn to the VIX, which we like to do, and we say, okay, well, where is the we have the swing high at the 27th. That corresponds with the swing low on the 27th, and we broke that low in the S&P, and we broke that high in the VIX. Some of these swing highs back here not yet broken, and those swing lows back here are not yet broken. So I want to see a spike in the VIX if the S&P is going to continue down. Let's say tomorrow we move lower and we break today's lows, but the VIX is not breaking today's highs. That's a move that I would be okay buying. I'd be okay going counter trend and buying up that move in the S&P if a setup presented itself. But if the VIX is confirming by way of breaking today's high as the S&P breaks today's low, then I want to stay away from going counter trend, because then we have that confirmation that that down move is sustainable. So a little bit higher volume, but nothing major. Intraday, we started off really I guess you'd say like a channel, um, kind of like so. But it was also, so you had, you could kind of draw this channel, but at the same time I was also seeing a widening formation where we started really tight and then we were getting wider. So there were those two things going on. We were breaking through retracements, short failing, long failing, short failing, long failing, until over here, really it was like an hour 15 into the day that we really had some momentum. I did take a short on the break of the bottom of the first 30-minute low from the high before the low. That sounds strange. This horizontal line is the first 30-minute low, and so I just grabbed the swing high before it and the swing low after it. Got my first target hit, but then it reversed on me. But that's a trade that I take fairly often, where the 50% lines up with the bottom of the first 30-minute range when we break below it. Or you could flip that upside down and be taking a long such that it pulls back and it's resting on the top of the first 30-minute range. So that's a setup that you can use. And then the second trade that I had, I tried to get in. So I noticed we traded nicely here down to the target. I tried to get in this next setup, but I didn't get filled at 975s. It touched it, but didn't fill me. So then I just took the next setup after that. When on a day like today, where we gap up, we come down, and it's really. Let me go to the 30-minute chart. Really showing bearishness on these candles. Like other than the second 5-minute bar, or the second 30-minute bar rather, where we had the bottoming tail, like the next candle, came down and ripped right through that. At this point in the day, we still hadn't filled the gap, so just that alone was enough for me to kind of be anticipating another 5 or 6 points to the downside. We hadn't even gone into the big slide, but nonetheless, once that occurred, once we broke basically the first hour's low, we ended up with another big body candle that just about filled the gap, and then we just continued on down from there. So that's kind of how today played out, and what I'm looking at for this week is referencing today's high and today's low. Want to be careful of anything inside this range here. If we are inside today's range tomorrow or later this week, I will be looking for fading, shorting highs, buying lows that correspond with high and low ticks. But if we can get out of the big 50-point candle that we had today, then I'd be looking for directional trading. So if we break the low, I'd be looking to take shorts. If we break the high, I'd be looking to take longs. But we won't really know until tomorrow. I've got the trading hours only high to low drawn up. So 27.98s, we'll call it 27.99s, is the failure point that I'll be looking for when I open my charts in the morning. Live trading room tomorrow, Tuesday. You can check that out, emoneymind.com/VIP. Thanks, everyone, and have a great week.